Opportunity to buy on a pullback. Hello friends and welcome back to a new video part of our market view series. If you missed our last market update, we have shared that along with all our previous market updates in the description below. So without further ado, let's get started with today's video. While the breakouts in the markets have sustained and this momentum is expected to continue, the short-term overbought nature of the market signals at a correction. The last couple of weeks have been quite eventful for the markets as Nifty as well as Bank Nifty continued their momentum post breaking through their respective all-time highs. One noteworthy aspect was, while the global markets continued selling off, Nifty was quite resilient and continued to be one of the top performing markets in the entire world. Having run out of options, foreign institutional investors, or as we know them as FIIs, continue to pour money into the Indian markets, which is expected to be the fastest growing markets in the next few years. It was only on Friday, the 7th of July, where the markets took a breather and retreated from the high of 19,523, which was an all-time high, to close at 19,330. Going forward, technically, markets could pause for some time before starting the next leg of an up move. In the short term, on the daily time frame, Nifty has become overbought with RSI levels of above 75, and it has formed a shooting star type of candle pattern at the upper end of the Bollinger Bands. This could be an indication of a small correction before the next impulse move starts. The open gaps at Nifty at 19,234 to 19,345 and 19,011 to 19,024 would act as a support for the markets. The derivatives data too suggests a huge OI, or as we know it as open interest, built up at 19,000 levels, and thus it will be difficult for the markets to break and close below this level on the downside. On the upside, 19,500 would act as a hurdle which has the highest positions built up on the call side. And it also happens to be the high of the shooting star candle we spoke about earlier. A break of 19,500 could see Nifty rallying to 20,000 in a short span, as it is a path of least resistance. Swing and positional traders can consider booking profits on open long positions and look forward for possible long entries only at 19,000. On the other hand, intraday traders can try and play on both sides of the market. For intraday traders, 19,201 to 19,181 is an area for considering long positions, while 19,488 to 19,525 is an area for considering short positions. Bank Nifty 2 is trading on similar lines. The index closed with a gravestone doji candlestick pattern on the 7th of July 2023, suggesting short-term price correction. The high of the gravestone doji, which was at 45,655, will act as a strong resistance point. This is also confirmed by a considerable amount of OI built up around the 45,000, 46,000 strikes. On the downside, 44,200 to 44,000 will be the support level for the index. The level not only coincides with the 20-day EMA, but also coincides with the prior breakout point of Bank Nifty. Swing and positional traders can look out for 44,200 to 44,000 levels for a potential reversal on Bank Nifty. From an intraday trading perspective, 45,314 to 45,222 and 45,307 to 45,417 are strong resistance points, while 44,007 to 43,909 would be strong support levels. Overall, since both Nifty and Bank Nifty have had a sustained breakout, the probability of markets selling off sharply is very limited. News surrounding the US Fed rate hike, the Eurozone recession, etc. would keep markets volatile. However, any such strong dips could be a good buying opportunity to build one's portfolio. And with that, we can effectively wrap up today's video. Thank you all for tuning in today. We will see you again next week with a fresh update. If you missed our last market update, be sure to watch that as well. The link to our last market update is on your screen and in the description below. Also, if you would like to learn more about our offerings at Hedged, we would highly recommend you do so by logging in at www.hedged.in today. Feel free to join our Telegram group called Hedged Ideas and stay up to date with the markets for free. The link and scanner to join the group are on your screen and in the description below. Till then, happy trading and investing.